It's that time again. Welcome everyone back into Crypto's News. It's me, Omar Bam, aka Crypto, here and excited to share with you what is going on in crypto today to keep you on top of things and ahead and at least on top of what is going on in this nascent cryptocurrency industry. Welcome back. Here we are making history day by day, getting to enjoy the proliferation and the growth of this, I think, important space. Thanks for sharing it with me, guys. Thanks for joining me, Rob Groove, Dreamcatchers. I see you guys out there. Kevin, I appreciate you always making it out. All supporters, Patreon, YouTube, and everyone else. Remember to hit the like, guys, if you do enjoy this kind of content. Subscribe if you're new to the show. And, of course, comment your thoughts on anything below, whether that's just something related to the news, something that I completely say wrong, or something that I missed. I really appreciate the opportunity to hear from you guys. And thanks for all the beautiful birthday wishes the other day. That was so kind of you. I really appreciate that, even if I didn't get a chance to get back to you specifically. So let's go ahead and dive into it because we have quite a bit to get through, and I'm going to try to do so expeditiously because I care about your time. But yeah, I appreciate you guys. Let's go ahead and start off by talking about the prices here. So we have Bitcoin up 1.1% over the last 24 hours, but up a really nice 13.6% over the last 7 days. Looks like it's getting ready to breach that $25,000 critical resistance level. I think that's a really important one, right? It's like a quarter of 100,000. It's like 5,000 more than 20,000. It's just a really nice, clean number. So I think to break it higher and establish $25,000 as the new support level would be something even more bullish. Like, could we be more bullish? I don't know. I'm definitely feeling that, but I know there are plenty of people who take the opposite side of that, and that's all right because y'all rocket fuel. I'm just joking. Anything can happen, of course, but still things are looking positive as far as the trend. Like the other day, I mean, you had Bitcoin pump like 9%, massive climb. I believe that was just yesterday, actually, like 24 hours ago, where it had the biggest climb since something like September 2022. Up something like $1,800 in one day. Previously, it was only up like $2,000 back in September in one day. But seeing big moves happen right now to the upside for Bitcoin, I think is something positive. But yeah, it had recently today pulled back to support levels and is now climbing again for that push to $25,000. Ethereum is at $1,708. It hasn't been as volatile as Bitcoin today, but still pulled back a bit. It's up 10.5% over the last 7 days. People are talking about all sorts of things that could be climbing, whether it's AI tokens, layer 2 tokens for optimism or arbitrum. These are things people are excited to see pumping right now. ZK sync, ZK rollup related tokens. People are again trying to find those opportunities, and they probably do exist right there right now, some of those opportunities, if you're into the whole altcoin movement. Although the safest thing for me is always just to like get into Bitcoin and Ethereum, but I guess you do you, right? Polygon Matic has also been doing really good. It's up 10.6% over the last 24 hours. And plenty of other tokens. OKB, 10.5%. Some of these altcoin names, of course, are going to be some of the highest gainers. You have so much ETH being burned. It is stupid. I mean, look at the supply change versus Ethereum's merge. We're down 27,000 ETH that are issued versus would have been printed if Ethereum had stayed on proof of work, which would have been almost 2 million ETH. 1,793,678 ETH would have been created up till right now, but instead it's negative $27,000 because we have a negative issuance basically for Ethereum at this time, which is even better than Bitcoin's positive issuance. So I'm hearing talks again about how March could be really, really good if, for example, this plays out with like what you see with Bitcoin. Bitcoin has its halving every 4 years with a supply reward for miners. It gets issued, gets cut in half. First it was 50 Bitcoin, then 25 and 12.5, yada, yada. This is the first time you've seen some sort of really huge shift like this in the issuance for Ethereum to this kind of degree where it actually goes negative. And with Bitcoin's halving, it can take around 6 months before you see the effects of the halving start to play out in the price. And we're about to hit the 6-month period next month in March for Ethereum. So it could be the case that Ethereum leads this market much higher, potentially because of the dropping demand. I think there's some concerns around Ethereum withdrawals and what that's going to mean. I don't think it's going to have any sort of super material impact. I continue to think that. Despite some of the FUD from the regulators, things look quite healthy, although there probably will be more withdrawals than would have happened previously because, for example, you have Kraken, the crypto exchange, announced that they're going to end staking services as they settled the Securities and Exchange Commission. We talked about that recently, paid a $30 million fine. But basically, they're going to give back their customers their ETH. They're going to unstake the ETH that were staked on Kraken. That would have been ETH that potentially could have stayed staked through the Shanghai upgrade, but now will have to be unstaked. I thought this was going to impact other players like Coinbase, but we saw earlier in the week, Coinbase said that, nah, they're not just going to concede that easily to the SEC. Let's take it to court, son. So I don't think it's going to be as impactful as it could have been necessarily, some of this fear around the regulator. So actually, I think that I'm still quite bullish for Ethereum. But let me know what you guys think here, of course. So yeah, we have another token that went up quite a bit today, and that is Rocket Pool token. It looks like this came out in the Discord for Coinbase Ventures, or for Rocket Pool, I'm sorry. There's very few altcoins I'm personally holding right now. I am looking out for any really good ones. But yeah, feel free to share. But one of the ones that I've been involved with for some time and I've disclosed for you guys, with you guys, is Rocket Pool token, which is an alternative to centralized staking. Instead, you take your Rocket Pool tokens and pair that with ETH, spin up a Rocket Pool mini pool validator. You don't have to have 32 ETH in order to stake, but you instead trust those smart contracts to allow you to stake and get a reward with a smaller amount of ETH. But anyway, I thought this was a super interesting prospect, and it looks like Coinbase Ventures, so the investment arm of Coinbase, is interested in doing so as well. This was announced this is on the ETH Finance subreddit, Coinbase Ventures. We're excited to announce that Coinbase Ventures is deepening its partnership with Rocket Pool via a direct investment into RPL token, In addition to its proposed entry into the ODAO, so the DAO for Rocket Pool, Coinbase Ventures also plans to use their RPL and ETH to spin up their own Rocket Pool mini pool. So more demand here for RPL continues to grow. And it's interesting, you see a lot of what's going on with perhaps these attacks on centralized staking, and this could be, I don't know. Again, this is the investment arm of Coinbase, so this isn't like Coinbase retail. You're not going to be able to hit like decentralized staking or some sort of weird option like a Rocket Pool staking on Coinbase.com just yet anyway. Really, Coinbase's own managed staking operations and nodes are the only option for that still. But maybe they're setting this up. Maybe they're getting involved, tinkering, and maybe this would open up for retail in the future to be able to spin up Rocket Pool nodes. Maybe this would be a way to get ahead of the SEC. Of course, there's arguments that are even being discussed here on ETH Finance. This actually could mean that there's more risks potentially for customers by allowing them to get involved in this sort of way, and that could actually make the regulators more likely to look at Coinbase. But anyway, I think this is all very interesting. It means that, of course, some of the smart contracts will get more scrutiny because you have these investment funds getting involved. More and more of them encourages more and more of them to look at a project like Rocket Pool or to look at the code and make sure that it's legitimate. But I think it's pretty exciting times to continue to see that move in its direction. And of course, I'm all about more options for folks to stake and for different ways to stake beyond just like one major staker getting a huge influence in the market. So Rocket Pool is, I think, a big player in that I appreciate. So yeah, let me know what you guys think about that if you've been following Rocket Pool. Pretty cool news. Yeah, and that's discussed more in the daily discussion today on ETH Finance subreddit if you'd like to join that discussion. So Paul Pierce, former NBA player in the Celtics, Boston Celtics. He was a forward. He's been charged for his promotion of this token called Ethereum Max, which has a striking resemblance to logo for another token. I think it's called like Ethereum. But anyway, you can imagine it was being pushed by all sorts of different celebrities. Kim Kardashian, who's charged by the SEC for promoting these tokens. Now you have Paul Pierce being charged as well, and he had apparently taken in $244,000 worth of Emax tokens to promote the tokens on Twitter. What a fool, man. You should know better than to take some worthless token. You should have at least taken dollars. Hopefully he managed to cash out the $244,000 either when he got it right away, or maybe, I don't know, maybe he had some sort of pump because of his tweets. He had put up a tweet showing a direct link to the Ethereum Max website to buy these tokens. He had also put up some fake profits, which were more than he had personally had in his portfolio from Ethereum Max, encouraging people to buy these tokens. But it looks like he is going to have to pay $1.409 million in penalties. Ouch. So hopefully he did make some gains off of this. Of course, this is the opportunity for the SEC to come out and say, don't trust the influencers and the celebrities and just plainly buy something because they say it. Same thing we've heard before. But yeah, I think it should encourage people from just shilling some sort of token that obviously he didn't do some sort of diligence in. I highly doubt he really understood what he was even promoting. And it's not the same thing as promoting some sort of shoe or like Gatorade or something like that. When you're promoting tokens that people potentially could put a lot of their personal money, sometimes, you know, they will take out their equity on their house in order to invest in some of these tokens because they're promised these mad gains, and this can really destroy some lives. So I think there should be more diligence here, but yeah, Ethereum Max. I remember I was at the Bitcoin conference in Miami when I was hearing about that being promoted. I was like, oh, this is not going to end well. Some of you might remember that. Well, it's good evening, Gortrabot. Hey, Renee, nice to see you. Hey, from the Bay, Renee. Like that. Yeah, Edge, one of the OG Bitcoiners, OG crypto guys. Paul Pui created this company. He had been involved with some of the early Ethereum wallets and so on. Still a great wallet. So yeah, happy to wear my Edge shirt from Paul. Hey, what's up, 10 pence? Thank you so much, 10. I still love to see you still out here, man. So Binance has had an article put out by Bloomberg about how they're planning on potentially pulling back, according to an unnamed source who said he didn't want to necessarily be public because these details weren't public, of course. But he had announced that Binance is planning on pulling back from their U.S. partners. This is following charges against Paxos, one of the operators of a stable. They basically issue stable coins. They have their own stable coin. They have this other thing called Binance USD, which Binance has said, hey, that's not our stable coin, really. We just kind of like let them use their brand name. But anyway, regulators are investigating Binance. We know they've been looking at them since at least 2018. So this is basically saying that Binance is kind of trying to move away more from partnerships with the United States, with all sorts of things, all sorts of banking partners. For example, here in the U.S., venture capital investments in the United States, they're reassessing them, checking their cost base, their cost benefit analysis with them, and that they might even consider delisting tokens from any US-based projects, including Circle stablecoin, USD coin. So this is according to a person, again, not the company themselves. They have in fact said that it's not the case. You have CZ Binance said this is false in regards to how they're considering delisting all US-based cryptocurrencies at Binance. Not Binance US, by the way, just Binance. This is false because what is even a US-based token, said Mossab Hussein, and CZ, CEO of Binance, said exactly. Blockchain has no borders. So yeah, maybe it is the case that they are pulling back from different investments. He did say that recently in a tweet. We pulled back on some potential investments or bids on bankrupt companies in the U.S. for now. Seek permission first. So it's not completely baseless in reality, some of what has been leaked here to Bloomberg. You got to imagine who these spies are, right? Like, apparently the Biden administration has said that these balloons that are floating around are not China. I just see a plane, funny enough, flying by right now. Are not from the Chinese spy program, right? But some of these spy programs are really at this corporate level, where your own employees are leaking information to the journalists. Bad employees, making it difficult. Now you have CZ out there having to tweet more. Anyway. We're moving on here. Sorry about that segment. Anyway, Coinbase Assets has announced yesterday, and I did mean to mention this, their support for Arbitrum. So there have been all sorts of calls to Coinbase. Hey, why don't you support more layer 2 options so people can take advantage of faster sending and receiving on networks like the Ethereum network? Why don't you support Optimism? Why don't you support Arbitrum? Why don't you support something like that? Well, they are going to be supporting Arbitrum. They have announced that eligible customers can now send and receive ETH, DAI, and WBTC on Arbitrum. So how it works basically is that you go to a bridge. They're called bridges between Ethereum and Arbitrum, or one of these layer 2s, and you like lock up ETH, and then it just kind of magically ends up on this other side chain. And now, woo, you can use the Arbitrum side chain. You've got Ether that you move from the Ethereum layer 1 network over to the side chain, and then you can take advantage of all these different fun decentralized applications, DeFi, so on, that exist oftentimes only available through these side chains. And it's much cheaper than, for example, going to like Uniswap and playing on layer 1 and paying, huge fees on layer 1. Instead, you pay less fees on one of these layer 2s. Oh, and the same thing for sending and so on. Especially when there's a lot of demand on the network, fees can climb. So you can imagine the value of this, especially if you're trying to build some sort of business or engage with applications with networks like Ethereum. This could be a value. So it's cool to see them support Arbitrum, one of the more trusted ones for Ethereum here. Arbitrum for the win. Oh, Tornado Cash developer. This is, I think, disappointing to hear. He was arrested, was not even given charges for many months. He was just sitting in the Netherlands jail and Dutch jail. Alexei Pertsev. He was arrested for his involvement in developing Tornado Cash, which is a smart contract that allowed Ethereum tokens to basically be obfuscated, to be you pool your tokens with other tokens and then have them spit out eventually, like a Bitcoin mixing, but happening automatically using smart contracts. So you don't really know the genesis, the origination of the original sender of those funds. So basically a way to, mask your funds. And you might think that might be for legal reasons. It could be the case for some of the funds that are sent through there, but they could be also for political donations. You might not want certain entities to know that you are donating to help Ukraine. If you're like a Russian citizen, for example, living, you can imagine how it could create scenarios for you of problems if people knew you were sending such donations. So anyway, he was arrested and he was finally charged after a long time. He's been trying to get out of jail naturally while having to go through these charges and deal with them, but he's been denied bail. He's going to have to remain in jail after a Wednesday hearing. According to a panel of Dutch judges, he could try to flee. He could try to hide evidence if he was released on bail. He, of course, has denied the charges against him that he has been involved with money laundering and that he operated this business that allowed for money laundering to happen, which is illegal according to the law. He's saying that he did not have control of this. It's a smart contract. It runs autonomously. Prosecutors are going to have to prove that he had direct control of this. Apparently, they have some information that he had these Tron tokens and he might be able to outweigh some of the influence of the DAO token holders in order to sway the business certain ways. And him and his other cohort, two of his fellow developers, Roman Semenov and Roman Storm, how they basically had a lot of control of this. And this is what enabled Alexei Pertsev, for example, to be able to afford the rent on his house. He had a house he rented a house. How could he have that if he wasn't? He was apparently a developer of in some sort of company, but it was not enough for him to be able to afford to rent a house and to have his Porsche that he had as well, according to the prosecutors. Rented house and an expensive Porsches. It couldn't have been possible, according to the prosecutor, with wages from his job at cybersecurity company PepperSec alone. Anyway, I think this is a good opportunity for education to happen, as is being mentioned here by the defendants' lawyers. He said to CoinDesk, the lawyer Keith Chung of Pertsev, that this is the beginning of a good education for the court and how decentralized finance actually works. It's not controlled by one individual. We had the opportunity to explain what the basis is for Tornado Cash at this initial hearing and why it is not money laundering. And it is our opinion that the lack of knowledge is what's keeping him in there, Pertsev, in jail. Of course, I'm disappointed that Pertsev won't be released on jail. The lawyer said he will fight until the end to show what the importance is of decentralized options, software, and open source code. It might be more difficult of a case because people are looking at the United States, according to this article, and looking at the Constitution and how the Supreme Court has upheld the ability to publish code, but no such law exists in Europe. So it could prove more difficult. I do hope it works out for him, of course. Anyway, moving forward here, we still got some more to talk about. So Do Kwon, founder of the Terraform Labs and that whole ecosystem, it was a project that was worth like $40 billion at one point. It was tethered to so many other crypto companies. When they were not able to keep the peg on their $1 algorithmic stablecoin, it caused all sorts of issues and runs on other companies, and just collateral damage that impacted us and kept this bear market just a little bit deeper before FTX showed us we could hit even harder. We could even go lower. Anyway, so he has been charged by the SEC in a 55-page document, charges of fraud and so on. It just goes into different details here in this article on CoinDesk that are finally, they were speculated upon, but now they're apparently have been proven because of some of the evidence the SEC has found here in their investigation. For example, it was told to the public that it was automatically self-healing Terra USD and keeping the peg around $1. But it was not the case because Terraform and Kwon had secretly discussed with a third party that the third party would purchase massive amounts of UST, their stable coin, to restore the $1 peg when it deviated from its $1 target price at one point. So basically they had a third party come out and buy it up to $1. And this is not automatically self-healing. And as this article says, it's kind of like those fake laboratory tests that Theranos founder Elizabeth Holmes engaged in and recently was charged to a decade-plus prison sentence. There's this fantastic movie around it. It's actually a TV show if you guys can remember the name of it, and post it in the comments down below, about Theranos founder Elizabeth Holmes, which I thought it was really, really well done. But yeah, you're kind of faking a promise publicly and to investors and so on. And this was something he engaged in quite a bit. I mean, there was all sorts of fraud that he engaged with. Also, it turns out that he's been spotted in Serbia. So prosecutors in South Korea have charged him. They've put out a red notice, apparently, trying to get him arrested and extradited back to South Korea. The prosecution has said that he is actually in Serbia, and he has quite a lot of money. He's cashed out recently, according to a news site, about $100,000 worth of BTC in Serbia. It looks a lot of the funds that have been linked to Terraform Labs and affiliated entities have been moved to some sort of unhosted wallet, which may be under his control. Lots of money. The SEC claimed over $100 million worth of that Bitcoin in fiat withdrawals has gone through a Swiss bank since June 22. So he's probably living the high life in his Serbian spider hole. Damn, Serbia. Yeah, I guess I must have missed that one back when that news began to break. But yeah, there's plenty more in that document. I'm just summing up some the finer bullet points here that CoinDesk had covered and are being shared right now. But what is this one? This was, I think, interesting as well. One fine detail may be the most gratifying and funniest of all those eagerly awaiting a reckoning for Do Kwon's unique cocktail of idiocy, duplicity, and hubris. Among the activities cited as providing legal standing for a U.S. prosecution of Kwon are the use of his infamous bullying Twitter account to promote Terra USD to Americans. So he had many different alternative personalities. We covered this on the show that he used to talk on social media, in private messaging groups. He had like different personalities he switched between, including this bullying Twitter account. He also notoriously used Twitter to belittle and dismiss critics who warned of exactly the flaws that led to Terra USD's implosion last May. This wealth of information is frankly a bit unusual in this sort of charging document, particularly in crypto fraud cases. The SEC seems to have really done its homework here, taking advantage of its power of punishment to compel evidence and testimony from cooperators. On one hand, SEC good, on one hand, SEC bad. So another member of Bankman-Fried's inner circle has neared a plea deal in the FTX probe. So this is an individual. So FTX, I'm sure you guys already know about that. Sam Bankman-Fried, we talk about this, and everyone talks about this almost every single day. So I don't know that I need to cover too much of that, but basically a fraudulent organization from the beginning, plastering their names on crypto arenas in Miami, and buying up crypto companies like nobody's business, and promising to investors the world, hailed as the future. I don't know, genius of the world, the future Satoshi, the head of it, Sam Bankman-Fried. But he lived in a penthouse with other individuals, and they basically operated FTX and Alameda Research, an investment company, in the same house. They just partied all day and operated that way. They didn't even bother with accounting, keeping track of who owed who what. Just the movie is going to be fantastic. But one of the individuals who lived in this Bahamas mansion, along with Sam Bankman-Fried and Gary Wang, one of the founders of FTX, one of the heads of FTX, and Caroline Ellison, the head of Alameda Research, was Nishad Singh. He is nearing a deal to say that he's guilty. He's going to plead guilty, probably for a little bit more leniency with his charges. This is something that you've seen Caroline Ellison and Gary Wang, the other heads, also do, where they agree to work with the prosecution in providing evidence. You have Sam Bankman-Fried saying he's not guilty on the 8 felony charges against him, but it may not help that, again, he has I guess it's not just the spies you got to watch out for in your organization. You got to watch out for your traitor, mutinous co-conspirators, because they will plead guilty and give evidence against you. So Sam Bankman-Fried did not choose his friends well and his partners, because Nishad Singh is also going to be possibly giving evidence against Sam Bankman-Fried and FTX here. It's just making it so difficult for him. So Nishad, unfortunately, man, young guy, 27 years old, seemingly a smart guy, helped develop some of the software that the exchange operated on. He helped launch FTX US. He is also probably going to be spending some time in prison. Maybe not. Maybe that's how this leniency deal works. I'm not rich enough or connected enough politically. Like Singh donated a lot to politicians as well. As it says here, $9.3 million to Democratic candidates and committees since 2020, according to filings. So it's like, they helped each other. Like, just make sure if we're going to be criminals, let's donate to other criminals. I mean, politicians. Let's donate to other, how did I make that mistake? Other politicians, because it's probably going to help us in the future. But let's just party really hard right now and enjoy it while we can in the Bahamas, and maybe we'll be all right. I don't know. It's getting harder to escape these days, man. It looks like Serbia was the right choice. You could have gone to Romania, but that might not have worked out for you. You could have gone to the Bahamas, but that might not work out for you. You'll just get pulled out of your mansion and shipped off to the U.S. Serbia seems like the right place to be. Do Kwon did his research. We're learning so much from these criminals. Anyway, moving on. I just saw this right before going live. I thought it might be of value. Something I haven't covered on the show, but broke out I think it was yesterday. The news was that OpenC had finally their volume. So they have been the biggest NFT marketplace. Their volume on a daily level was surpassed by this new platform called Blur. And Blur has just blown up. On a weekly basis, they've yet to be overtaken by OpenC, but OpenC is not taking any chances because Blur had basically said that they're not going to be charging royalty fees to their creators at all. And they recommended that since OpenC has certain rules that don't allow for creators of these collectible NFTs to sell on two different platforms, since they have rules against that basically people go on Blur instead and blacklist OpenC, since they have to choose one. Instead of posting on OpenC, they can sell on Blur and keep all the revenues. It seems to have worked out since Blur token launched their own airdrop, and it shot up in price and volume, and the platform itself shot up in interest and volume, and now OpenC is like, damn. But I do appreciate what they're doing. Just like Facebook recently announcing that they're changing their ticker symbol from Meta, which they had changed to from FB, Facebook, their stock ticker to Meta. They're now like, okay, maybe that was a mistake. Let's go back to FB. You're seeing the same thing kind of here. Well, OpenC really quickly trying to change their business around to stay relevant. We're making some big changes today. They announced OpenC fee is 0% for limited time. Okay. Moving to optional creator earnings, 0.5% minimum for all collections without on-chain enforcement, old and new. And 3, marketplaces with the same policies will not be blocked by the operator filter. So if you are selling on OpenC, you'll still be able to sell on Blur. So I think a smart move here. They go into some of the reasoning down below. But I think it's smart to admit that something was wrong. And this is why capitalism works. This is competition at its very nature. And I still love to see that on crypto. It happens a little bit quicker than you see in other fields. It's a beautiful thing. Anyway, this was just posted by a senator of Tennessee, former ambassador to Japan. He wrote, "Make no mistake, this is in reference to what we were talking about with this Operation Choke Point 2.0, where you've been seeing the banking regulators go after crypto at the same time. You have the SEC, what they're doing against crypto happening, certain legislators going after crypto, and they're going hard, right? It's not even working right now. Like, the prices are still going up. People are still getting involved in this. They're just trying to stop the U.S. citizens from being able to prosper. Oh, no, we must go down with the USD ship. But instead you have offshore doing much better. Nice job. Nice job, everyone. But anyway, this Operation Choke Point 2.0 being similar to Operation Choke Point 1.0 that affected all sorts of businesses that were morally dubious here in the United States, like marijuana dispensaries not being able to have bank accounts. You had like WikiLeaks having issues with accepting donations. Oh, man. It worked out quite well, Choke Point 1.0, so they're trying to get again with crypto, it seems, to cut off crypto businesses from funding and having bank accounts. So Senator Bill Haggerty wrote, "Make no mistake, this Operation Choke Point 2.0 is an extreme overreach from the banking regulators, and they should expect to hear from Congress soon. Huh. Did this tweet just change? Oh, no, there it is. That's the top part. My bad. I'm hearing examples of companies in the crypto space being debanked by U.S. banks who are caving to political pressures from the left. If Operation Choke Point taught us anything, it's that under no circumstances should banks be used as partisan tools to kill legal businesses. I think it's stupid that they're used, like, he's still just, I mean, he's a politician, so it's got to be left versus right. Ugh. But I think the general idea that this is a choke point 2.0 and it needs to be called into question is important. But it's actually happening from, it's happening from the White House itself. I don't know. Personally, I feel like the CIA has more influence than people give them credit for. And they might control the White House, but that's my conspiracy theory hat. Let me take that off right now. Anyway, yeah, nice to see that'll be called into question. Why are you guys doing this? This needs to be investigated. And for whatever reason, it's good to see that could be happening, like you're hearing here from Senator Bill Haggerty. So anyway, I will leave you guys with that. I hope you've enjoyed the show. I hope you've enjoyed the week. Happy Friday, guys, and I hope you have a fantastic weekend. I thank you so much, guys. Those of you who are just always showing up, Pothead, Renee, Gorcherbot, Christopher, whoever I missed here, Pothead. I said that one. I will catch you guys the next time. Take care, everyone. Much love and stay cryptic. Peace. Wait, we forgot the quote of the day. In 1 minute, you can change your attitude, and in that minute, you can change your entire day. Spencer Johnson. Okay.